Welcome, everyone. My name is Alex Dixon. I am the Senior Director of the Finance, Investment, and Trade team at the Millennium Challenge Corporation. MCC, as we're commonly called. We're a U.S. development agency within the U.S. government. We've been around for 17 years in the development finance space, and we have also been looking to increase our footprint and our involvement in blended finance. So I'm so happy that I get a chance to moderate a discussion today with some of the leading doers, as I like to call them, in the space. And it's great to have a panel where you have people who have experience in blended finance, not only from the policy side, but also from the ground side of actually making the investment, because it makes more for a much richer discussion as well. So today's session, what we're trying to do is highlight climate finance and figure out how blended finance can bring about more climate finance investments and what role blended finance is going to play as we move ahead, kind of with the I call it the new old agenda of climate finance, which has come to the forefront. What we're going to do today is hear from three panelists. And at the end, what we're going to do is have a Q&A. We'll try to have it around for 10 to 15 minutes. And we're asking participants to leave their questions in the chat box. And then we'll go through the questions in the chat box and start prompting them to our panelists. So I'm going to do a quick kind of a round for our panelists, who they are today. And then I'll do a quick opening statement, and then I'm going to hand it over to our panelists. So we're joined today by Krishaya Sierra Escalante from the IFC. We also are joined by Satu Santala from the government of Finland. And we will be joined, and hopefully we are joined by Matthew Pele from Meridian, which is a private equity infrastructure firm. One of the, as I say, I opened up, we're here today to kind of gain a greater understanding and exchange ideas on blended finance and how we can catalyze development. Our panelists today are going to discuss de-risking opportunities that will innovate climate finance in a post-COVID-19 environment. We're going to talk about governance structures and places of support and how they can be effective and discipline needed for blended finance. And one of the highlights that I would like some of the panelists to talk about is how we look at the development rationale, the additionality rationale, and the concessional element, and when we make blended finance decisions. I also think that it's important when we talk about climate investments to understand the mitigation investments that are needed in many industrialized countries from the adaptation investments that are faced by a lot of the low-income countries as well as the low-middle-income countries, which a lot of donors operate in, and how those adaptation investments can be part of a kind of climate resiliency strategy that a lot of nations are trying to adopt and a lot of projects are trying to basically feed into. There have been calls for global leaders to basically set national agendas to achieving net zero greenhouse emissions by 2050. These requests basically have been incentivized by governments to kind of neutralize and do different things for incentives from a policy standpoint. And what's driving this is kind of a basic scientific evidence that the world is getting warmer. We need to do more, and we need to basically protect our environment to have long-term benefit, not only from a social perspective, but also from a financial perspective. And it was interesting today, I heard Larry Fink during the opening preliminary talk about the pension funds and how pension funds and institutional investors are looking at climate finance, not necessarily from just an investment lens, but kind of, a lens that has to create long-term value. And I think climate finance should be looked at as a core institutional investment that has to be made. I think there's challenges. As before, but we've made a lot of progress. We just look at solar and the price of solar and how it's come down. And hopefully Matthew will be able to talk to us about some of the solar projects that they've been involved in. But also, I think from a policy standpoint, what COVID-19 has brought into focus is that, reactive policymaking has its ups and its downs. And with climate finance, where we are now, we have the ability to kind of really take a thoughtful approach to the policies that we're going to implement long-term and have a chance to really plan something and do something that will make a difference, in the next 30 years. So what I would like to do now is have an opening question that I'm going to ask the panelists all to answer. And it's related to kind of the topic du jour as we return to normal here all over the world. COVID-19, the crisis has kind of impacted the availability and the demand for blended finance at the same time. Government's budgets are stretched, to say the least, in all aspects, but at the same time, there's a need now for more blended finance, especially in the climate space, where some of the projects do need concessionalities when there are in new areas or kind of public projects that basically need a little help as far as attracting private sector investment. So I'm going to ask Krishaya to kick off and kind of, Krishaya, not only can you talk to us about what the IFC is seeing as far as the response to COVID-19 and the impact and demands that you have seen, but also can you give us a little bit of context and definition of blended finance, how the IFC sees it and how the IFC approaches it in the general market. Thank you very much. And then I'm going to ask for Santu to follow after her, and then Matthew hopefully has joined us by then and he can follow up.
Alex, thank you very much, and good morning, good afternoon, good evening to to our panelists as well, and the audience that is joining us. Thank you very much for the interest. I think I will start as you asked me, Alex, to think a little bit about the background, right? I mean, as you have mentioned, governments have been trying to support some of this climate action, but we know that just the investment gap is so large that the public funds cannot do it alone. We need the private sector, and I think that's when you get to see both the DFIs as IFC that focus on the private sector, that we can play a role, and then blended concessional finance that puts together the small amounts of public funds into private sector projects that have high impact, that can bring public goods that have demonstration effect, that then can take us, as you have highlighted, to commercial viability when commercial markets can do it on their own. But at the beginning, we need this help. You have mentioned sometimes it's different business models. Sometimes it is a high perception of risk that requires, some of the blending. Many times are new technologies in the climate space. So IFC started this journey of blending concessional funds for investments with climate funds. Some of the multilateral funds that started in the early 2000s gave us this possibility. But we also have had important evolutions, with respect to this. And I think it's, important to highlight the private sector aspect of it again. And, I think just to note that there is a session at 1 p.m. that I believe Climate Investment Funds is talking about the private sector and climate finance. So for those of you interested on that, that could be something, helpful. As I mentioned, we have started this journey with climate finance, blending for climate action. And what you see is, depending on what is needed, different products, different instruments, and perhaps later in the conversation, we can get into that. But to get into your specific question about, COVID-19, I think from the availability of funds, we tend to see that, there is just less resources. And therefore, those resources are trying to be directed to a specific action. And I think it's important that we make a case that, of what is necessary on the climate space to make a difference. On the project side, we are also seeing, and I'm sure that, my colleagues in the panel, we talk about this as well, but we are also seeing projects taking longer. Due diligence that before was able to be done, through a trip, sending people to meet the project and the project sponsor now has to be done virtually in many cases. So, there are delays in projects. At the same time, the urgency, as you have mentioned, on the climate, on the climate side in particular, requires us to be more innovative, more efficient in the use. And we have seen it, and, during the tremendous impact and, very, challenging momentum that we have had with COVID-19, that we have had a lot of requests for using blended concessional finance, in particular, to support some short-term needs, working capital solutions. And, we cannot change, I will say, we cannot forget that while we need to support those immediate needs, the green recovery is very, very important. And I think that is part of why we need to set the stage today to ensure that we are going to be investing in a green way going forward as well. So, a combination of factors, Alex, in COVID-19 that makes it more challenged, but I think big opportunities that, with the support of many of our development partners, including, Finland and, Satu will get into a little bit more of those details. It's important so that we support projects as those that Matthew will be talking about. So thank you for that.
Thank you. Satu next.
Thank you very much. My name is Satu Santala. I'm Director General for Development Policy at the Ministry of Foreign Affairs of Finland. And I lead a team of about 100 very skilled and dedicated development policy and finance professionals. And our annual budget is about €1 billion to spend on development. But on COVID-19, I guess it's impossible to overstate the dramatic impact, and in particular in the global south. And we're well over a year into the crisis, and really we're still in the middle of it globally, and the impacts, the social and economic impacts are really devastating every day. And most tragically, the pandemic has amplified existing inequalities, and this continues to be so as the crisis lingers on. I really would like to underline that a global crisis like this can only be overcome together. And of course, one key immediate priority is to get global vaccination coverage as soon as possible. As part of Finland's global overall COVID-19 response, we've contributed over €100 million internationally to various COVID measures and continue to do so. But to the specific question on the supply of funds from a donor country to blended finance, so far we're not really seeing a challenge in Finland. I think of course, our public budgets are very pressured at the moment, but still also the commitment for global solidarity remains high in Finland, and our aid budgets continue to grow at this moment. And also on blended finance specifically, the pandemic has really not had an immediate impact on our policy. I guess, a public actor, at least in Finland, has the luxury of being a little bit more patient of an investor. The government has made a decision in 2019 to allocate approximately €500 million of returnable development investments over a 4-year government period, and that decision still stands, with 75% going to climate and 60% going to Africa. And we've been able to continue programming these funds with some delays, but nothing very significant. We of course understand that blended finance comes with a risk, and that as a result of the COVID-19 situation, the risks have increased. However, over the medium to long term, we do believe that our investments will continue to provide a return while delivering on development impact. So we of course take a little bit of a longer term view. Then on climate in the current situation, of course, the concern is that the COVID emergency has temporarily maybe eclipsed other global challenges such as climate change, but they haven't vanished. They're still there and becoming more critical day by day, and the funding needs remain enormous. And as Kriskaya just said, it's really important that now that we all work for a global recovery from the COVID-19 crisis, we are ensuring that we're building back better and greener, and that we provide a more resilient and sustainable future for the planet and for the people. And this is something that we in Finland very firmly believe in and are working for together with our partners. Thanks.
Well, thank you so much, Satu. I'm going to ask Matthew, who's joined us now, to introduce himself and to talk about the impact that COVID-19 has had on their portfolio and the investments that he's looking at Meridiam.
Yes, many thanks, Alexander, and good afternoon, good morning, everyone. My name is Mathieu Peller. I am a CEO for Africa at Meridian, which is a developer and investor in long-term public infrastructure projects. So essentially, clean energy, mobility, and social infrastructure projects. We are active in Europe, North America, and Africa, and I will mainly focus on Africa today. I mean, in Africa, we have seen over. I mean, to answer your question on the COVID-19, what is quite interesting is we have seen quite a strong resilience of the energy sector over the last year. We have seen quite a good pace on the development of new projects. And therefore, we remain confident on the immediate outcome of developing and unlocking new clean energy projects. What is really the matter? That's the scale and the pace. And when we discuss, in particular with for limited partners, the ultimate investors in our funds, that's really the concern. Can we really deploy at the right scale in Africa? And I think that's why we need really to all together make more efforts on that. And of course, in that effort about scale, blended finance has a lot to offer. I mean, if we define blended finance as everything on top of, I would say, a regular and straight loan, either concessional loans to reduce the cost, viability gap financing to make the projects more affordable, or financing to develop projects, either with developers or the organization of tender processes. This is, of course, one of the best way to unlock many projects, make them bankable and enable to achieve scale and impact on the improvement of the energy mix on the continent, and achieve the goals we have if we want to be Paris aligned. And therefore, I think that's what we'll have the opportunity to discuss. How can indeed blended finance support that further?
Thank you so much, Matthew, and welcome again to the conversation. I want to have a follow-up question about donors' perception to climate change, and kind of as we approach 2030, what impact have occurred there? Is it more immediate now than ever? Are you spend less time kind of convincing governments that, this is the right thing to do? But also with that, how there's always a conversation within the development community about the use of ODA funds, especially for an organization like myself, which is grant-based, whether we should be using our funds to be doing blended finance, whether the Meridians of the world, can go it alone on their own. So I can you tell me the experience that IFC has had with blending as far as perception and kind of with ODA? And it's not too, can you also talk about, just as a government official, how you're looking at and how you justify making some of the blended finance commitments that you made? I know you have a partnership with the IFC around climate. So can you talk a little bit about that as well? Krisha, I'm going to start with you. Thank you.
Thank you, Alex. And you have mentioned it has been an evolution. So in the early days of blended finance, everything was grant-based with the flexibility that within the DFIs that use those resources, we were using the many instruments that Matthew was talking about, the concessional loans, some equity, some guarantees that were concessionally priced, as well as, maybe performance-based incentives of viability gap funding. At that moment in time in the early 2000s, as I mentioned, probably we were managing around 40 million in blended finance. If you fast forward to today, we are managing more than 5 billion. So, part of that evolution, the part of that scale is because, as Satu mentioned, also the partners are looking at it as returnable capital. Some of them, to maintain at least the principal investment, if I can call it investment from that, instead of being a grant making. So that's what it allows, is that you can create impact either, by using it once and returning it to the partner for other uses, or using it once and then again repurposing and using it multiple times. So I think that is an important evolution that we have seen with partners. What also has been important is to continue reiterating to those partners that this entails risks. That doesn't mean that they have guaranteed returns in these funds, because if you are going to take some of these risks that Matthew was talking about, to help scale, to help the scope of these projects. So many projects perhaps will go only to certain areas, perhaps very proven technologies in middle income countries. If you want to create additional impact, then you need to think about additional risk taking, and that is the flexibility that blended finance can bring. And at least in my experience, and I'm sure that Satu can complement from the perspective of the development partner, in my experience, I have seen an important evolution, from those partners, both in the understanding of the benefits of blended finance, as well as the potential risks of blended finance. All of it seeking to achieve more impact. I think the reality is we need to go back to basic, and whether we are going to provide, this blended finance to private sector, partners like Meridian, or whether we are going to do it through a financial institution that is well known in the market. The important thing is what's the benefit, what we are trying to do. And that's, I will say, at the end of the day, what the development partners are seeking to achieve by giving us, and entrusting us with their blended finance resources.
Thank you, Krishaya, for that response. Satu, would you want to kind of come in and talk from your government perspective, government of Finland's perspective, of kind of the issues that you're looking at as far as decisions that you're making?
Thank you. And you asked earlier whether we still need to convince our governments or our government to invest in climate. We no longer need to do that convincing. Our current government is committed to making Finland carbon neutral by 2035 and carbon negative soon after that. So the sense really in Finland is that all hands are on deck, and we really need to make all the possible measures, both domestic and international, to really get to this problem. So we are doing a number of different things, for example, through the Coalition of Finance Ministers for Climate Action, which Finland is currently chairing, and really trying to, as Krishaya said, really the impact is what matters. We need to really see systemic changes in our societies, greening all financial flows and our economies on the whole. So on our international climate finance, we are using all the different channels of development, cooperation, finance for this purpose. We're working with NGOs, with multilateral organizations, so on, and we're doing adaptation and mitigation and trying to balance the two. But we know that grant-based financing will never be enough. And what we really have decided some years back is that we really, one of our priorities is to mobilize private financing to tackle the climate challenges. I said earlier, we have returnable funds that we can use, approximately 500 million euros for 4 years. And this is our main tool for doing blended finance. We also firmly believe that given the vast needs in tackling climate change, we need the private sector as a partner, both to innovate technological solutions and to bring in the much needed capital. And IFC has been a key partner for us in promoting private investments into climate change solutions in the developing world. We started this partnership back in 2017 when we launched Finland IFC Blended Finance for Climate program, where 114 million euro investment was made by Finland. And this was really a co-creation by the two teams. This was the first time ever we had done anything like this. And it's been a learning opportunity for us, but we really see the benefits of working in this kind of a way. The program aims to catalyze and leverage capital for innovative early stage climate projects with strong development and climate benefits that would not happen otherwise. And we believe that really using our funds in this way is beneficial for the impact. We're very pleased with the results that have been achieved so far, and we've been able to fund innovative solar and hydro projects and are part of creating markets where they did not exist before.
No, thank you. Well, next, I want to kind of transition and kind of talk about, and Matthew, I'm going to put this question to you. You know, the uses of blended finance in the market and projects that you're seeing and you're using. You referenced energy. What other sectors do you think, you know, that can attract blended finance? What sectors are on the horizon? And then I also want to kind of put a question after Matthew to the rest of the panelists about pipeline, and that there needs to be a pipeline for the private sector to come to, and where is that pipeline going to come from? And what does that pipeline look like, especially in climate? And what opportunities are there for organizations to help develop that pipeline for the private investors can come? Matthew?
Yes, sure. I mean, first of all, I mean, blended finance can help on two main issues. I mean, one is affordability for the clean energy technology, where there is still a question on the affordability. But the good news is that most of the technology are becoming actually competitive against fossil fuel technologies. That's the case, of course, for solar. That's the case for wind. That's often the case for hydro, and the same for biomass and geothermal energy. Where on the last ones, however, there are still a lot to be done on development cost and risk sharing for developing projects. But I think on the affordability, that's one key area, of course, where that could help, even though that's less and less, as I just said. But where it is indeed, I believe, even more important, that's on enabling the development of project and de-risking this development. I think the great value of the clean energy is that the operations are most of the time relatively straightforward and not very risky. So if we speak about de-risking, thanks to blended finance, that's mainly to deal with the development risk. And there are many tools that can play a role. I mean, either the setup of frameworks like scaling solar, which enable projects to happen, or there could be participation to on one side capacity building focused on project assistance on the government side, or on the other side, on the sponsor side, there could be participation to development cost, either general development cost or specific risk. We have, for example, in our portfolio, a geothermal project in Ethiopia, where we have the support of the GRMF, this multilateral facility, which is helping and supporting the development of drilling in geothermal energy, providing significant subsidies for developers. So that's one good example of de-risking the development phase of projects, which then will be able to be competitive, sustainable, and bring benefits. So I think that's these various tools which need to be develop further, indeed, to create a pipeline, because that's really what matters for the investors, of course, but as well for industrials and developers, because there is going to be a massive investment in clean energy across the world, in particular in developed economies. And of course, if scale is not here in emerging economies, and in particular in Africa, there will be less participants, and that will not be good, of course, for the results, both in terms of price and quality. So I think that's this toolkit which we need to use more to create scale, and then to react a bit as well on your previous point, we need to measure the impact we create on the SDGs. I mean, that's what we do at Meridiam. We, for example, set up our own tool and methodology to quantify the improvements in terms of the relevant SDGs on a given project. On the climate side, side of course, but as well on other SDGs which are relevant on either biodiversity, improvement of institutions, gender, and so on and so forth. So that's important to quantify the impact and to share that with the stakeholders in order to demonstrate the benefits of these investments and the funds made available through blended finance. So that's what I would say.
No, thank you very much. And Krishaya, I mean, if you, part of your response to my earlier question, one of the things I want to make sure that we get, and I know we're running out of time, is impact, because that is, impact. If it does, if you can't measure it, then how are you going to justify it? So, and also you highlighted earlier, we have to prove impact in our use of funds. So if you and Satu can kind of talk about how you're viewing impact in addition to the use of the different tools that are out there, it would be helpful, not only to me, I think to some others that are in the audience.
Thank you very much, Alex. And as within IFC, the way that we blend is to come alongside an IFC investment. So we use a co-investment model, and for us, it's key that we look at the measures that we already have of impact for the IFC project, and we use what we call the AIM, the anticipated impact measurement and monitoring, to assess what are some of the project impacts and what some of the market, impact related. And I think what is important and what creates that credibility is to make sure that we are looking at a project, and Matthew was talking about different dimensions. What is that this project is doing in the climate space? And we have clear agreements, for example, with SATU on what we need to report back in terms of GHG reductions, and if it is a climate adaptation project, why is it climate adaptation, within very clear methodologies, so that there is no question about putting the funding very clearly. I think the other important aspect, I will say, that it's related, to impact, is how do you use these funds with very strong governance, so that we are using them and sending them to the projects that need them. What we don't want to do with blended concessional finance is to de-risk projects that do not need de-risking, because what that is doing is potentially distorting a market. You want the commercial market to really, be left alone and work when it works, and for us to come when it is necessary. And, I really like, what Matthew has emphasized, is when it is necessary to bring scale, when it is necessary to accelerate, the project. In addition, it needs to be complemented with other things, Alex, and you ask about pipeline. Blended finance can support the development of pipeline through de-risking, through reducing costs that are still unaffordable. But we need to think about the other things, the project preparation, the upstream work that IFC is doing, the work that we do with the World Bank on reforms, on thinking about enabling environment, because those are all very important and interrelated part of how we see this. And Alex, all the work that MCC does in terms of preparing preparing, and ensuring that, there is an attractive environment so that, sponsors and developers can come in. Because ultimately, as Satu was also mentioning, we want the impact and also we want the mobilization of private sector. And that's a very important aspect of what we see of blended finance. In the last 10 years, we have been able to deploy around 1.6 billion in blended finance across different teams, including climate. And with that has come more than 6 billion of IFC investment, and then more than 7 billion of other money, whether it is sponsored, other DFIs, other private sector investors. So this idea of the leveraging more, of bringing more, funds to achieve more impact is very, very important.
Well, thank you, Sakrai. So, Tricia, Satu, can you kind of weigh into, and one of the comments you made earlier, you're talking about of your fund that you have, of the climate fund you have allocated, large percentage of those are targeted to Africa. And I know in some of the markets that we operate in for MCC, it's just a challenge to identify the projects. And even when we have capital to kind of improve that enabling environment. So can you talk about, what you see in the project pipeline and some of the reality of the challenges that you expect climate finance will face?
Oh, thanks. That's a lot of difficult questions. Let me start on what I was thinking about listening to your previous conversation, really on what I think one of the most important lessons that we've learned from our current partnership with IFC is that the flexibility we provide with our funds is really important, because then because our funds can be used to provide equity, senior debt, mezzanine debt, or guarantees. And then that gives the task teams putting the transactions together opportunities that can be tailored to each specific context and situation. And therefore, I think that's really the way we look at it from is that, we provide as flexible tools as possible, and then those will be then turned into action by the teams and by the sponsors. And really, at the end of the day, blended finance, from our perspective, is really giving that opportunity to, or making it possible to find opportunities and leverage additional finance through concessional funds that actors like the Ministry for Foreign Affairs of Finland can provide, and then that kind of opens other avenues. On the pipeline, I think Kriskaya mentioned it. It's really important that we find sort of that organizations work sort of in a networked manner, because we're a relatively small donor, a small country. Our network is rather limited. We've chosen to work with IFC, for example, because it's a partner we know that has a lot of capacity, and again, in turn, works with other partners on that. And I think really the more we can have diversity of these kinds of partnerships, the better we find our inroads into different pipelines. For example, we've seen brilliant projects that have started as NGO projects in a very small scale, non-profit making, and then have sort of over the years transitioned into profit-making bankable projects. So I think we need that kind of collaboration. But then a couple of words on impact and measuring impact, and I think it's really the lifeline of continued support to international development in a country like ours. We need to be able to explain with clarity and with numbers to our taxpayers that the resources they're providing are making an impact. So there's no question about that. In Finland, we've put a lot of effort into developing this in our own work, and we really expect our partners to be able to report to us on this data, and then we in turn report back to the Parliament. Currently, every 4 years, we do a really big comprehensive results report, which is sort of really very important. And there, not only do we need good data on the climate impact, we also need to be able to show the development impact it is making. And then I really want to underline that for Finland, gender equality is really important. So we also insist on gender disaggregated data so that we can also show the impact that our funds are having. So I'm not really sure if I answered your question actually, but some of the thoughts that went through my head when I was listening to the conversation.
No, thank you for those comments. They were very insightful. And I know that we have 10 minutes to go. And I'm going to ask everyone again to post some of your questions in the chat box. And there was a lot of questions, definitely the impact, based if I'm kind of looking at the chat box. Impact hit a lot of questions. A lot of people had different kind of on safeguards and measures and so forth. One thing I want to kind of ask, and while we get some more questions that come in, is on risk. Because there seems, Satu, you said, you have taxpayers' money, but at the same time, you're in new areas and new countries and you have to take risk. And with risk comes failure. And, with failure comes criticism sometimes in the development world. I would like to get Matthew's kind of from your side as a private investor. You probably have a higher risk tolerance. How do you try to approach working with DFIs and with some of the actors in the blended finance space to accept more risk? And then from the other side, if we could have Satu, kind of how you look at it from a government when you're programming funds, the risk tolerance that you think you'll take and that you can accept. So Matthew, you want to start off on the risk question?
Sure, thanks, Alexander. Of course, the best mitigants for risk, in particular in Africa, that's to offer to the host government or the host utility the right project. When I mean the right project, that means the project at the right cost, affordable, and for which the economics are sustainable over the long term. That's the right projects in terms of ESG. Environmental issues, of course, have to be dealt with properly from the very beginning, and because often they can actually become political issues when they are not treated properly. Exactly the same for social issues when there is a need for resettlement, either economically or physically resettlement. This is a major mitigant to take care of that from inception, and governance and integrity in general. That's of course as well extremely important. So I think starting with doing the right projects with the right standards, the IFC performance standards and others, that's of course a must and a very strong risk mitigant. Then of course working with DFIs and more generally donors in case of concessional loans or blended finance, it helps as well in terms of political and diplomatic umbrella, and to be sure there is a minimum buy-in from the host governments. But of course, it doesn't. It is not enough when the right project is not on the table. So I think that's the combination of both. A good project at the right price with the right way of dealing with the impact, both the negative ones and minimizing the negative ones and maximizing the positive ones, and working with DFIs all together. I believe these are powerful risk mitigants, and at the end of the day, these kind of projects, we have very limited default rate. I think the annual study from Moody's is ranking Africa, for example, as the second lowest place in terms of default for project finance. And I think that's quite encouraging. Again, and maybe that's one of the reasons of this ranking. The number of projects are quite limited, and there is not enough. So again, we believe that the issue is more the scale, and how can we have the right scale with the right risk mitigants, of course, because of course if we are not stringent enough on all these issues I just discussed and just do scale for the sake of doing scale, that may not work. So I think that's this right balance between this way of working and the scale that we have to find.
Okay. So, too, you want to react from the government side on risk and taking the appropriate risk to drive the climate agenda?
Yeah, that's an interesting question. I think on the one hand, we have a very low risk tolerance. On the other hand, maybe it's not that low. I think, whenever in development aid, be it returnable funds or be it grant funds, whenever there is even a small case of corruption, mismanagement, whatever, it easily creates news and attention. On the other hand, what we try to do to our decision makers and our taxpayers is to constantly explain and say, yes, this is a business with a risk. We work with very complex and difficult circumstances and situations, and things may happen. However, we have we do our best ahead of time to reduce those risks, and then whenever things happen, we always take measures. But it's I think on our blended finance, we have yet to learn how difficult those conversations will get, because it's still relatively new and we haven't really had a lot of challenges. But we of course have a longer history with our bilateral DFI FinFund. And of course, both economic losses and then questions with both human rights, social issues, all kinds of challenges have arisen. My guess is that pure financial losses of a failed project are easier to swallow for the public and for decision makers than for example, environmental and social risks going really bad. That's really difficult. But so for our blended finance, our best risk mitigation approach is selection of partners. So we only work with really established international organizations like IFC with a very robust system for managing risk. That's really, we cannot as a small donor do anything else but that. We have maybe one or two smaller partnerships with very much less funding also involved, but we can only do so much of those kinds of things. But yeah, it's a tricky question, but I think we do need to continue explaining also to decision makers and taxpayers what the nature of those risks, and then when because things will happen, then what were the reasons behind, and what were the measures that were taken to correct the situation.
No, thank you very much. Rashaya, I want to ask you, I know we're getting pressed against time, but one of the questions that came up was around blended finance for new ventures and startups and so forth. And that kind of gets to part of the segue, how do you get the new players and some of the smaller players and venture projects into the blended finance arena, where it's just not all going to the big projects, and sometimes the community impact could be bigger for a startup or an NGO. So what are the things that you think can happen, or is it just the capital that has to be moved just doesn't line up?
Thank you, Alex. And perhaps if you allow me just one small point regarding the risk mitigation that I wanted to, to complement. And I think, as Satu was saying, it's very important, the partnerships. And for us as blended finance, one of the things that we give to our partners, same policies and procedures that for our own account apply for the blended finance activities that we have. And I think that gives comfort that we are looking at these projects in a very, a clear way, with this very strong governance, separate, including, for blended finance, a separate governance that looks at why we're going to put these funds. And then finally, disclosure. For us, it has been something that we have been enhancing over the years. Every transaction where we use blended finance is part of our public disclosure and puts very specific information, including on the level of concessionality, the subsidy that we are providing. And I think it's very important for the public of the partner, the donor partners that is giving us these resources, as well for recipient countries and other partners that need to know. Getting to your question on basically the smaller players, the startups, the smaller funds, we need to use intermediaries as DFIs, basically to go with a very small transaction.
Right.
It will not be cost effective, but we are seeing in particular with the use of some of our IDA private sector window, which is the fund for the poorest countries, that we are having some very interesting de-risking solutions, working with fund managers, with incubators to try to get to the smallest SMEs, and also with financial institutions. So there is a number of programs that we have that is allowing us through these intermediaries to get to the smallest companies with very innovative technologies, with very innovative business solutions.
No, thank you very much. And I know we're right at time. So I would like to thank all the panelists for your insightful comments, and thanks for, I know everyone's dialing in from all over the world. Matthew's dialing in from Addis, so thank you for staying up late. Satu, hopefully you have a great evening, but this has been a very insightful conversation for me, and hopefully one we can kind of continue as we move forward. And I encourage everyone to definitely let's follow up in via the chat room and some of the other links that are available on the platform. But thank you very much, and everyone have a great time. Have a great evening. Thank you.